Hey everyone, and thanks for jumping back into the cryptoverse. Today we have another edition of our collaboration series. This one is with TechDev. He is fairly prolific on Twitter. He posts all the time, and I think he puts out pretty good analysis. He mostly focuses on Bitcoin, but occasionally you'll see him dabble in some other cryptocurrencies as well. But I just wanted to bring him on the channel so that you guys can see what is he looking at in the markets. It's a pleasure to have you here, TechDev. By the way, if you're not following him, go ahead and pause the video. I'll put a link to his Twitter in the description and the pinned comment, so you can go follow him on Twitter. Pleasure to have you here, TechDev. Let's go ahead and jump in.
Yes, thank you so much for having me, Ben. It's really an honor and a privilege. I've been an admirer of your channel and your work for a while, so to be here with you is special for me. So I appreciate you having me on.
Yeah, it's great. I mean, I think the main elephant in the room, right, if you will, is what's going on with Bitcoin, right? Like, where are we? It's been fairly stagnant, right, for a number of weeks now. So, what are you looking at in the markets right now for Bitcoin? What do you see happening?
Sure, sure. Yeah, and I think that it's interesting right now, as I'm sure you've noticed, as we've been stagnant now towards a time when myself included, we're expecting some more parabolic movement. Everyone's getting a lot more vocal and uh, just yeah, in discussions about timelines and cycle theories,
Right.
and what's a lengthening cycle, what's a 4-year cycle, did one break, did the other win, what's going on? So yeah, what I'm really looking at is where we can start is what you see here on the screen. So this is a layout that I've shown a number of times in charts that I've posted. And what's always caught my attention, if we look back at the last, what I call the full cycles of Bitcoin, the ones that had a Bitcoin halving event within them. Oops. Um, I noticed these three key Fibonacci levels, and these are log-based fib levels that are pulled from the past cycle low, or excuse me, the past cycle high to the current cycle low. And remarkably to me, you first have this major bounce that seems to happen off this 1.272 level, and this happened the last 3 times in the month of July in each of these cycles. And then the next critical hurdle to get over to me seems to be this 1618 level. Now, I didn't pay attention enough to this, I don't think, a couple of months back. And you'll see in a bit, that's kind of, I assume we were a little further ahead than we were, which gave rise to my December and January expectations. But it seems like in the past, once we've cleared this hurdle, and these are 2-week candles that are shown here. So once we've closed a 2-week candle fully above the 1618, that historically has sent us up to this just above this 2.272 level. And in the last 2 cases, that has coincided with this log regression band. I believe this was fit prior or post the last cycle high. So I'm really curious to see now. Nothing looks off track to me as far as health of the market right now. As of today, we're kind of right at this, what I would call the key intersection point between this mid curve of the log regression band, this 50% fib curve of this band, and this 1618 level. And if we can close a 2-week candle above it, I am expecting some explosive price velocity upwards, and am excited to see where that takes us. Are we going to top at the log regression band? Are we going to make it above it to the 272? Or although I still have a hard time seeing us right now extending all the way out to the latter half of next year, that would be the point where the two targets would meet and would allow us to satisfy both conditions. So that's how I look at the market right now, is we seem to be at a pretty critical point where a strong 2-week close above this level could mean some big runs for Bitcoin.
And it looks like to me, I mean, I'm just sort of eyeballing it here. It looks like the blue line, judging by the, sort of the distribution phase that we had back in February, March, and April.
Right.
It looks like it's right above, so it's around like 64K,
Hmm.
somewhere in the mid 60K region. So basically, you're looking for a 2 week close above that level
Hmm.
would look pretty bullish to you.
Correct. Yes, that was our what looks to be our big resistance point, and it is exactly where the top of that distribution seemed to peak. We've yet to close a 2 week above it. We wicked above it. We haven't closed above it, and it's also the same. It was true for this point here back in 2013. We ran up against that level, wicked above it, didn't close below, came down, bounced off this one, and then when we did finally close above it, that sent us up into the final market cycle peak. And it's just astonishing to me that 8 years later, with a million X higher market cap, we ran into the same line in April, bounced off this one in July, and did the same thing in this cycle. Now that could be pure coincidence,
Right.
but it's pretty remarkable to me.
Yeah, I mean, I think it's interesting for sure because we don't really talk about this type of analysis on this channel. I have a question about this. I'm
Mm-hmm.
curious if what your thoughts are here. So one of the things I notice is after we break it, so after we broke it in 2013, for instance, it was about you said these are 2 week candles, right?
Correct. Yeah. So
Yeah, yeah.
that's good.
So it was
Correct.
a
You're looking at like three two
three,
week candles until we wicked, right? So
right?
you're low was like 6 weeks.
But then
Yep.
in 2017, it looks like it was more than
Hmm.
three, right? It was like five or something, or
Yeah. Looks like it's about five, right? So
so
6 and 10 weeks. Hmm.
yeah, so I mean, the last one was about 2.5 months then, right? Back in 2017, you're talking about two
That's
and a half.
exactly right.
Yeah. So I'm just
Hmm.
thinking, like, I mean, it certainly makes sense. I think from that it would take longer. I think, I mean, just from a fundamental perspective, right? Just pushing that market cap up another 2x, another 2x is going to get harder and harder to do that
Right.
with time.
Right.
So, do you think that is that something that we can, um, you know, take to the bank in the sense that like it
Hmm.
might take longer? Not to say that it necessarily has to go out till say the end of 2020, 2022,
Sure.
but could we do you think it's reasonable to say look at 7 2 week candles after we break it? Like, what do you think about that?
That's a yeah, no, that's a really good point. It's something that I was looking at, and once I noticed kind of this what seems to be this critical break that has to happen, that kind of reset. I mean, truthfully, what I thought was the case, and I can talk more about this in some of the other slides that I have, but when we left this bounce here, we had the mid cycle, or what I refer to as the mid cycle low. I know you've had Jordan on your channel. He refers to
Right.
it in a similar way. This mid cycle low, this bounce, and then this correction with a takeoff after it. I thought we were here already. I
Hmm.
thought we had our mid cycle, we'd seen our bounce, and then we were on this trajectory. So I was looking at time based fib extensions, and I was looking at angles of attack, noticing that historically this last impulse tends to be about 5 degrees steeper than this first one. So assuming that we were already in this part of the cycle, that's where that December to end of January projection came in. But now that I'm seeing this interaction here, and when you actually go back and you look at some of the lower time frame structures, there is it is looking more clear to me that we're still in a consolidating phase after this mid-cycle low. You can't see it on the 2 week candles, but um, and I've got it in another slide, so we can talk about that. But
Hmm.
you're right. So now that I've kind of determined or suppose that this last break past is going to be a critical moment in the cycle, yes, then you can start to maybe make some assumptions as to how many candles it's going to take to get to the top.
Right.
I would not be surprised to see. I guess I could see it going either way. Truthfully, I could see us taking more than ten or excuse me 5 2 week candles, uh, just because of this trend that's going on. You've gone from
Right.
3 to 5. Maybe we take 7 candles, but I could also see it maybe all taking 5 again, because I do view our trajectory in this cycle being more similar to this one
Right.
than this one, where you have this initial big run up, this bounce at the same month. So if you sort of almost take an average of the two, where if we were on 2017's path, yes, then we would have more than 5 candles. But then if you bring back this, what could be a more vertical, relative to this first run up, a more vertical climb, maybe that brings your candle count back towards back closer to 5. But
Right.
there's some other there's some other geometrical things I've been looking at too. Like I mentioned, the relative angles that seem to take place between this first major run up and the second one, and projecting out where that might take you. That it's starting to look like a February March intersection up here could happen. Of course, it depends where you top. But yeah, I mean, truthfully, it's been an interesting couple of months where
Yeah.
what I'm most concerned with right now is finding the top whenever and wherever it comes. I do not, as you know, I had my December to January window, and if it's missed, I'm personally happy that it's missed, because I want a longer cycle as much as anyone.
Right.
It helps with long-term capital gains rates. I think we're probably going to go higher the longer that we go, like you do. And I don't intend to be one of these, personalities that gets their clout from getting their timelines right, and consistently shifts their projections and forgets about the fact that they got it wrong the first time. So if we go longer, I'm happy, and I'm right now I'm most interested in seeing if we can get out anywhere near the top whenever and wherever that comes.
I mean, I think I feel like that's really the only correct way to navigate the market, right? Like, have your models, and always, of course, have what you think will happen, but be willing to be flexible, right, at any moment, because these short-term moves in the market are incredibly difficult to predict. One of the things that I when I look at this chart, I kind of want to get your opinion on. So one of the things I've talked about before, and you mentioned it as well, is that this cycle looks a lot like 2013, right? And the idea that it could be like a potential double peak cycle, right?
Right.
One of the things I've said before is I think you're right. Like, I think it is a 20. Well, I should say I think at the very least it could be a double peak cycle. For all we know, I mean, it could end up being like a triple peak cycle if we get rejected heavy off 100K for, I don't know yet.
Right.
But I've thought about the idea that it could be like a stretched out version of 2013. One of the things I want to get your opinion on here is, if you look at the consolidation phase at the white line after the mid-cycle dip, right? So after the mid-cycle dip in July, you have the bounce back up to that middle logarithmic regression band. If you look at it back in 2013, we basically just shot through it, right, on the first attempt. Like, we didn't.
Yes.
So that one, it was like not really a whole lot of consolidation. It was just like, all right, 2 weeks, and then we're off to the races. In 2017, what is that, like 4 2-week candles in there, right? Maybe 3,
Right.
something like that.
Right.
So you're talking about like 2 months, almost. And so then today we're looking at something similar, right? We've put in about 4 weeks so far. So, we put in about 3 or 4 2-week candles so far. So yeah, I mean, like, do you have an inclination on it continuing to stay in this range for a little while? Like, do you think it's more likely to just kind of consolidate here for a few weeks and then break out? Or, I mean, obviously it's hard to predict these short-term moves, but yeah, what do you think?
Sure. Yeah, it's a good question. I mean, maybe for this one, we can jump over to this view that I had. So this is me kind of now zooming in on the interaction that happened around this blue line at each of these cycles. And what has caught my attention and kind of pretty close to confirms for me that we are not yet in the final, or what I think will be the final impulse, and are in fact still in this in this I guess largest consolidating phase after the mid cycle is this structure that we seem to see after this bounce off this 1272 level. In both of the last cycles you had, I mean, I share your exhaustion with the term Wyckoff now this
Yeah.
cycle. I think I've heard that enough for a few lifetimes myself, whether it's distribution or accumulation. Certainly no one was using the term back in these two cycles that I saw,
Yeah.
but you did have a distribution phase that led into this bounce off this line. And what seems to be the case is you then had this trend line construct out of the peak of the distribution phase. In this case here, you had this local high, you had this trend line drawn. When you broke above this, you back tested it, just like we've done here, but it's taken longer each time, in my opinion. Well, maybe it's not an opinion, it's pretty obvious. Oh, excuse me.
Right.
These are daily candles. So you had more daily candles needed in each case to back test this trend line. And then once you came up, now in 2013, you didn't come up quite to the 1618. You kind of had this period of sideways action underneath it. Then you shot above it and you came down and you almost back tested this swing high. Same thing in this cycle. Actually, you can't see it, but if you extended it out, you'd see a larger correction that came and back tested right just above this high here. So after this back test, you come up, you have this second then swing low down here, like we are having right now. And I am expecting, truthfully, I really think in the next couple of weeks, we're going to see maybe the next 2-week candle, we're going to see this break past the 1618. I do expect it to come up, make a clean break of the all-time high, and then have a sharp drop back down and back test maybe just above the 69K level before getting into our final parabolic leg. And another thing that supports that to me is this, you may have seen this on some of my posts, this kind of remarkable structural parallel that I see between the track that on an obviously much higher time frame,
Right.
The 1970s gold bull run had on the monthly time frame. How does that keep it? And the weekly candles of our run here, where it's just, it makes you question whether we are in a simulation. Because not only do you have this high time frame structural parallel, but this local top that happened at this distribution phase happened at around 1.2 trillion market cap for both of these assets in gold and now in Bitcoin. 1.2 trillion put in this local high. So you had this strong run up in what's known as the buying climax prior to the distribution event. You came down, you bounced, you came back up, you back tested this trend line. Now we've come up and we've gotten rejected by the previous all-time high. We wicked above it, but we didn't close above it. And now we're coming back down and we're testing just above the previous swing high here. So if this structure continues, you would think that in the next couple of candles, we would see a break past up. Now these fib levels are taken from this local high to this local low. I don't necessarily know if it's going to follow this exactly, because I think we have to consider other price history of Bitcoin. But if it does hit these levels as gold did, you're talking about possibly a move like this, where you come up, you come back down, you retest the all-time high, then you come up to this level, which if it plays out, I'm sure folks will call a cycle top here. Mm-hmm. If we hit this and exactly at this level and none of the indicators are firing yet, although I think a lot of people will be screaming top, I'll have some confidence that it's not quite in yet, because we've continued to follow this model. And then we'll see where we go after that. I've taken the time frame off the bottom, obviously, because as I mentioned, I'm not too concerned about exactly what months this happens in. I think This is the high time frame structure I'm personally expecting to see. But yeah, to answer your question, I think the next couple of weeks is pretty likely, in my opinion, to see a push past, but who knows?
And these are also 2-week candles, is that right?
These are weekly candles
okay,
here, and these
weekly.
are monthly candles.
Sorry, okay.
And you bring up, I don't know if this is where you were going, but it is an interesting point. If you align these fractals between where if you align this local high and this local low here, this track of gold as it plays out does take you somewhere into the month of February for a top. But what's been interesting is that ever since this local low has been put in, we actually count the number of candles that it took to come up and back test.
Right.
These are months, these are weeks. It's taken 9 candles to back test here. It took 9 candles to back test here. And then it's been about 9 candles from that to roughly where we are now, which is still sitting above this swing high. So the weeks and the months have kind of synchronized since this local low. And if that continues, you've got about 20 more candles to go on this model, which would tell you, 20 weeks from now. I mean, I can't remember. I think I did the math that might even put you out like into March or April.
Right. I mean, if it's like 5 months or 4 or 5 months, it could easily. I mean, I think too, it's. I mean, of course, there are some differences, right? I mean, I think if Bitcoin weren't competing with so many other different cryptocurrencies, maybe it'd be a little bit different. I don't know, but I mean, I think this is a really great example, a really great comparison that I don't really see anyone else making. And I mean, if you think about it, right, we have gold, right, the store of value. We have digital gold, Bitcoin.
Exactly.
It seems like it's on it seems like it kind of makes me want to ask you this, like today. Gold, as we know, is kind of become the joke, right? Because we talk about store value and whatnot. And,
right.
Over the last 10 years, Bitcoin is up, over like 1 or 2 million percent.
And
yeah, but gold is down.
Right?
Yeah, but sometimes it's easy to make fun of the gold bugs, right? Like it's so easy.
Sure.
But then at the same time, like I kind of wonder sometimes, like, will that be me in 30 years where I'm like, holding on to my Bitcoin and saying, like Bitcoin there's no way anything else is better. And is it going to ultimately go to that level where it's like gold and it just eventually gets to this place where it mostly just goes sideways, because you could follow this. I mean, you could follow this sort of growth for a long time, right? What do you think about that? Like, do you think it's heading, do you think it's heading to 10 trillion like gold? Do you think it's headed that way? Like, what do you think?
To be honest, I don't have strong opinions on that. I've not spent a lot of time thinking about the 10, 20, 30 year time horizon of Bitcoin. It's certainly possible. I mean, I don't know how many times Bitcoin has been called, dead and just a purely speculative bubble that's eventually going to zero. And time again, it's proven that those statements wrong, and it's followed this, what I think is kind of a beautiful cyclical nature in how it grows. But I mean, from a market perspective, just applying common sense. I mean, I can't see these. There's no question. Mathematically, we've lengthened from the low, we've lengthened from the halving. And in a few weeks, we're going to lengthen from the previous high. Right. So the notion of lengthening cycles being an opinion from that definition is nonsensical. It's numbers at that point.
Right.
But there still is, to me, an interesting cadence of something of the Fourier nature going on, where we are seeing these key landmarks in the cycle roughly be spaced, 4 years apart, give or take a couple of tenths. If you look at this bounce off this fib level, you look at the where this mid-cycle, or what I call the mid-cycle peak, was put in. So far in this cycle, they've been spaced, give or take 4 years. And if we do peak in February or March, I don't know what that puts it at, 4.1, 4.2 years. I mean, to me, that is still very interesting, that you can have an asset that can grow orders of magnitude in market cap from across 2 different sets of landmarks and have them spaced, give or take 4 years, even if it's 4.2 or 4.3. I mean, what other asset can you speculate on where you can bet within that tolerance range when the next bull market top is going to be? Certainly not the NASDAQ or any other major asset class. So that's interesting to me so far, but I can't see that continuing, truthfully, just from a a market dynamic standpoint. I mean, too many people would get too wealthy if all you had to do is close your eyes
Yeah.
and sell 4 years later, right? So
Right. Yeah.
I think
If
that
everyone's a billionaire, no one is, right?
no, you're exactly right on that. So folks have the some theories about this being the so-called last cycle, where we're not going to actually have a market cycle peak, and we're just going to kind of continue to go up and down like we did in April to I don't know how many years out until I'm not sure what they expect to happen after that. But um, yeah, I think at a certain point, this 4 year cadence is going to disappear, and we are going to approach a level of stability like gold has seen, if Bitcoin hangs around that long, where it, last time I checked, gold was 1700 something, and it was 1700 something 10 years before that. So it's like,
Right.
yeah, I think eventually there's a stabilization or a saturation that goes on, presuming that Bitcoin hangs around. But these other coins that to date have kind of been carried by Bitcoin in its market cycle, they're certainly a lot younger, I think, in their market structure. And I imagine that a lot of we're already seeing it. I think this cycle, we're seeing a lot more of the speculative capital go into some of those other projects rather than Bitcoin. And I expect that to only that asymmetry of speculating to only heighten as maybe the next cycle happens, where we see less volatility out of Bitcoin, and a lot, yeah, let speculation go into some other projects.
I mean, I think it's clear as day, right, that there's some cyclical nature about Bitcoin. I mean, whether it's, I mean, depending on exactly where you put things, there's so many different ways you can look at the halving, right, and every single time, give or take 100 days or so after the halving, you generally see Bitcoin go up.
Right.
But yeah, I mean, I think you're right. Like eventually, too many market participants are just going to start front running everything. Sometimes I wonder if that's kind of, I try to rationalize certain things, and I mean, I know there's a lot of people, right, that think we're really close to a market cycle peak. I mean, like within the next couple weeks or so, within the next 2 or 3 weeks.
Right.
And sometimes I kind of wonder if are there people that are just front running that, right? Like they don't want to be the guy that doesn't sell, and so maybe that's sort of keeping us at bay for a little while. I don't know. I mean, I don't really know. Something I had a question about. So you mentioned, we can't just do this forever, right? We can't just go up 100x or something from or whatever, right? We can't just do that over and over and over again, because eventually Bitcoin would just be worth a quadrillion dollars, and that doesn't really make a whole lot of sense. But I also noticed, if you go back one chart, I want to ask you a couple questions here.
Sure. Are we talking about this lower time frame one?
Or sorry, go to the gold one.
The other one here.
Sorry,
the gold one?
The gold one first.
Yeah, this one here. Okay.
Okay, so this one I've noticed that you sort of have an arrow going up somewhere between 240 and 340. But then I want you to go back to the first chart now. So 240 to 340. And then this one, it looks like the 2.272. It looks like it's going around 200K. Is that right?
Yeah, so that's a good point. So that is the 272 for this cycle is right at about 205,000.
Okay, so 200K, give or take a few K, right? Is it because that would actually be in line with diminishing returns if it kind of peaks at 200K. I'm curious, what are your thoughts on it potentially overshooting that? I mean, because it is at least a consideration to make that it could certainly overshoot 200K. I'm not personally thinking it's going to necessarily overshoot 200K, but just the gold chart that you have has me intrigued at least.
Sure. No, you're actually right. I mean, yeah, I look at that, and actually, if you play out this extension and you come up with the exact extent, I think this ended up being like the 7 point or close to like 7.846 or something this was, and that actually puts it up at like 315,000. And I didn't have the nerve to put that on the chart because I personally have a hard time seeing that myself. But yeah, that it is intriguing, right? So I can bring up this one here and talk more about. So like I mentioned, in both of these past ones, we shot just a bit above, and um, because this is logarithmic, just a bit above can be tens of thousands of dollars when we're at this valuation.
Right.
So something else that I noticed is if we try to drill down more precisely on how much above the 2.272 we might go based on history, there's this interesting linear extension where if you focus in on these two landmarks and you see the first time that we exceed this 1618, even though we don't close above it, and then the lowest that we then drop below this level, maybe it's coincidence, maybe it's not, but it's pretty startling how accurate it's been. If you take this high and this low and you extend out a 5618 linear fib extension, that called the 2013 top within $22, a couple of percentage points. It called the first time you exceeded this 1618 and the lowest that you dipped below on the swing low, this 1272, that called the 2017 top within $150, also 1 to 2 percentage points off. So if we apply the same idea to this cycle, highest above, first high above this level, lowest dip below this level, that puts you up at just over 230K.
Right.
So if I had to pick a number as to how high above 200K we might go if we're lucky enough to get there, that's probably what I would pick. But we'll just have to see.
Yeah, I mean, I certainly a possibility. I think it's also important to to point out, as I'm sure you know, like if you go back to the gold chart, even that move, it was a wick, right? I mean, obviously these are monthly,
exactly.
They're monthly candles, right? But if you
but
equate
if it's weekly now,
yeah,
you're going to talk about like
right,
moments that you're going to be at that level,
right? And so probably we could probably make the case that a majority of market participants would not actually sell on that one day that it hits those levels.
Exactly, right. Everyone loves their top targets, but they don't think that it's going to be there for minutes if you're lucky.
Right, and I think it's something that is, we always like to compare, like, okay, well, if you buy the exact bottom of the cycle and you sell the exact top of the cycle, you're going to make this amount of money. The truth is most people don't buy the exact bottom and sell the exact top. Anyways,
correct.
But, I mean, if you're selling,
you're right.
Yeah, my theory on this is if you're selling Bitcoin at 200K sometime in the next year, you're doing pretty well.
Agreed. So. Yes, absolutely. Without a doubt.
Right. So let me ask you something else. I mean, I also, I don't know what other charts you have, but I do want to ask you something to just get your thoughts on, because it's certainly easy to miss this topic if it's not brought up. And I try to do this myself sometimes, but I'm not super good at it. We always talk about the bullish case, right? Because that's what we want, right? We always want Bitcoin to go up. It's in our best interest that Bitcoin goes up. What would be concerning? Like, what would, and I've thought about this myself, but I'm curious, like, let's just say some black swan event happens or something.
Sure.
What would have you worried that, maybe this time is different in the sense that, we might not go to all these levels that we're looking at. I mean, I certainly don't think 69K is the top, but is there something you would be looking at from like a market structure perspective that would give you a worrying sign?
Yeah, that's a great question. So when it comes to finding, and maybe we can conclude with this a little in a bit. When it comes to wondering when you see these peaks that I think we'll see, whether they're the actual top or not, I'm really going to rely on on-chain and price action based indicators to suggest to me because we're going to continue to see drops. I mean, this market is going to continue to have impulsive and corrective waves. Anyone who is just going to sell because price goes down a certain percentage is, I think not really approaching the market quite the right way. I'm really going to rely on certain indicators to tell me when a certain top of the wave is likely the top. But as far as then losing structure, and let's say that yes, we don't actually break above like this, and we do stay consolidating, and maybe we dip down further. I mean, from this structure so far, if we were to go significantly below this past swing high, that's then a pretty strong deviation from the structure. I'm sorry, from the structure we've been following for about 60 weeks now, which is this one. So a close below this swing high here at 53, or I think it's closer to 52, that would start to give me some pause and make me look at this a little bit differently. I also think last time I checked, that's about where your bull market support band is set up, is right down there in the very low 50s. So a close below that band right now is not something that I would expect us to see at where I think we are in the cycle. So that would be definitely a first red flag, would be a close down in the low 50s or upper 40s on a weekly basis. Mm-hmm. Then the next big thing, of course, is if we lose this macro swing low and we actually make a lower macro low with a close, that then is definitely a sign that we've completely invalidated this structure. And then the other thing I'm looking at is this, what I call this 2-week RSI floor, which is what one of the tools I intend to use if I think we've topped, to determine if we're likely to be descending into another bear market, or if we are going to have a third top, or if we are lucky enough to be in a last cycle scenario where we are not going to have an extended bear market. We're just going to keep going up and down, up and down, up and down, and in
right.
50% corrective movements at most. So this one here shows in the past, after Bitcoin has made its first higher high of the cycle and it's come back down and made its next low, that's set what I call and these are again 2-week candles, that set this RSI level that to me has set a floor. And what I've noticed is that RSI never breaks below this floor until the bear market sets in. So you had this deep correction in 2013 that came down, it didn't break below, it bounced just above. And it wasn't until it actually happened kind of just before this first major dead cat bounce, you broke this floor, which to me signals the start of a bear trend or a multi-year downtrend. Same thing in 2017. You had this first higher high put in after the low. The low that followed then set the floor, and it was the break of this floor that only a couple of a few 2-week candles after the peak, you were already down below this floor, telling you that you were in for some downtrend. In this cycle, we set the floor just over here and bounced right above it at this mid-cycle low. And this is a little bit outdated now. Now we've come back down and we're about right here on the 2-week RSI level. So if we were to see further correction down, and in addition to those other structural things I mentioned, if we lost this floor, that tells me we're probably not seeing another all-time high for quite some time. Now, that would be entirely different than anything we've seen to date. So if it would be of any comfort to anyone, I wouldn't expect the bear phase that followed to match any of these either. And I would expect us to start moving back up sooner than a year from that point, since we didn't have this euphoric blow off phase. But yeah, this would be another thing I'd be looking at to tell me that something's really off.
Yeah, I mean, I think that's a great point to make. Like, look at these long-term trends in the relative strength index. Are we breaking these macro levels of support? It's funny because, I heard you said that, if we're only going to go on 50%, I think only in crypto could we say, only 50%, right?
Well, you saw the other day, we went down 20%, and Bloomberg came out and said we're in a bear market because we went down 20%. Yeah. We have a totally different barometer for what is a big correction.
It's also another important thing to point out is, a lot of people fear bear markets because of, just because, of course, if you're overexposed in the market and it's going down, it's never fun. But really, those are probably the best times to be accumulating, especially at the latter end of it, right? Not necessarily right at the beginning, but especially as you get into the latter end in the accumulation phase. So, which brings me to my next question. Let's assume things play out, right? Let's assume we go to 200K. Whether it's in January, February, October, April, May, who cares, right? Who cares when it happens, right?
Right.
When it does happen,
Right.
that's the point. When it happens, or even if it doesn't make it to 200K, but let's just suppose there's
Sure.
some peak, everything is flashing. Hey, this is, we're too far extended. Um, what do you think the potential drawdown would be from that level?
Hmm.
Do you like for Bitcoin? Like what? Maybe are you looking for a certain percent decline? Do you think it's going to be like an 85% drop like we've seen
Hmm.
in the past,
Hmm.
or what kind of price levels would we be looking at there for a potential future bear market bottom?
Right. Right. Yeah. That's a really good question. Um, so yes, as far as the top, you're right. I mean, if we get up to 200K or above, that would be great, but we cannot discount this log regression band, and it's going to be really interesting to see what happens if we interact with it. Um, I would not be surprised at all to see a peak, 150K or less, and if indicators were firing at that point, I'm more than happy to start scaling out of the market. What I'm showing here is one of this is also the 2 week RSI, but framed a little bit differently, where it seems like we formed. This is one of the indicators I use to form this Bitcoin top gauge that I'm keeping an eye on, that has signaled around a level of 100 in each of the past peaks. But this channel is the most striking to me in that there's a slight descending trend line up top and a parallel one down below that has seemed to call the last tops. And there's always two major peaks. This one didn't quite get up here, but it still did make a local high. This one which is from 2013 that I think we're more closely following, did touch twice. So I am expecting to see this come up and touch again at this upper line of this 2 week RSI channel, to signal roughly where we've topped. Even if we have a rounded top, the rounded top, it went a little bit higher after it touched. It touched when we had this strong run up here, but we still did touch it before we eventually went back down. So
Hmm.
if we do hit this wherever we are, to me that's signaling we're pretty darn close to the top. And if you then look at the bottom of it, when you've touched the bottom of this channel, that has called the within a certain margin of error, of course, the cycle low. So it's price wise where I think we might end up. I mean, it's I have a hard time believing that if we did have a blow off top, that we wouldn't see a similar decline of 80 to 85%. That's just kind of the nature of how these major corrective waves have occurred after such a volatile final impulse wave. There's some Elliott wave counts out there, and I'm not an expert on Elliott wave by any means, but I have found them interesting, where there can be some macro counts of a wave structure all the way back from this first impulse in 2011, supposing that we are in a macro wave 5 of the cycle, where we could have an even stronger correction than 80 or 85%, because we've had a macro 5 wave impulse up. Again, I'm not an EW expert, so I don't put a whole lot of weight in those particular accounts, although they may be right.
Right.
But I mean, certainly if we top anywhere near this log regression band, that to me further validates it and would tell me pay attention at the bottom of it, because that's probably where the bottom is going to be.
Hmm.
So depending on when that happens and the trajectory that we see ourselves on, if we have a bear phase, that could definitely tell you where we'll end up being. What's been interesting is that the last bear lows have sat kind of right above where this mid-cycle high has been in the previous cycle. If you draw a line across, it's almost like a high time frame support resistance flip that's gone on with the bear market low,
Right.
where it's come up and it's bounced right on this level. Same thing over here. It came and it bounced right above this mid-cycle high. So I guess that could tell you what 60K could be the next bear market low, which would mean you'd expect it, maybe if we follow log regression, to be out here in the start of 2023 at 60K. that, but then if you apply those percentages to decline 85% or 80% and reach 60K, that I think supposes a peak this cycle of well over 200K
Right.
to get down to 60K after an 85% drawdown. So I'm not too sure. I mean, my highest probability bet would be if we do see a blow off top, 80% is probably a fair estimate of how far we're going to draw down, especially if we break something like that floor that tells you we're in for an extended period of decline.
Right.
Yeah, I mean, if I had to pick a number, I'd say anywhere from 60 to 20K would be a reasonable range to expect a bottom. I know that probably seems like a big range right
Well,
now
no, I mean,
to many people,
no,
but
I mean, I think it. I mean, I think it makes sense in the sense that part of that decline depends on where the top is. Like you might like if the top is at 100K and we drop 80% from there, then 20K
right,
seems like it could happen. I don't
sure,
think we're going back to 20K, but yeah, I mean, like depending on how we go, and I think one nice thing too, theoretically speaking, of course, is that diminishing returns to the upside eventually over the long haul should also mean that the downside is not quite as bad eventually, right? Eventually. So I mean,
right,
we'll see what happens, right? We'll certainly see what happens with that. But yeah, I mean, I think you're right. I mean, I think it kind of depends on how high we go, and then you kind of take that percent move
right,
from that region.
right.
Um,
Yeah, and I do think it's important to not, I call this slide compounding because as you said, I think it's really important for folks that are trying to, get very wealthy in this space to not panic themselves into thinking that they have to get everything perfectly right this cycle. I mean, if you're just getting into the space now, um, do the best you can. Getting out anywhere near the top is better than probably 95% of the participants are going to do.
right.
But realize that the real gains, like you rightly said, come from investment or reinvestment anywhere near the bear market lows.
Right.
And if you just do some simple math, you can figure the level of compounding that you can see even from reinvesting anywhere near the low. So it's not to say that holding indefinitely isn't a reasonable strategy. People that have done so since 2011 are very wealthy if they've held Bitcoin since then.
Right.
But if you were able to get out and re-enter anywhere near these yellow and red circles, your gains are, orders of magnitude higher. So
Right.
certainly don't base your reentries on price alone, but use some indicators like this to guide where the reentry points might make sense, and definitely don't drive yourself crazy thinking that you need to get life-changing wealthy in this one cycle,
Yeah.
because that's
There's always another cycle, right? Theoretically.
let's hope.
Yeah, I mean, I think it's a good point. I mean, obviously some people, take the just hold forever strategy, and I mean, the people who bought in 2017 are still, I mean, they're still up, right? Even if
They're
they
still
bought it,
up.
even if they bought at 20K. Note, a lot of people give Bitcoin a hard time, right? Because it doesn't give as good of returns as some other cryptocurrencies. But another way to look
Right.
at it, especially for people that, continue to accumulate for even as we go into the next several months and whatnot. One way to measure the ROI is to measure it from the prior top, and Bitcoin is up about 3x from the prior top. There are a
And there
lot
are
of
some altcoins that aren't.
yeah, there's a lot of altcoins that aren't, but we have a habit of measuring altcoin performance from the bottom, right? But I mean, it kind of just goes against showing you that Bitcoin certainly is a safer play than
Correct.
some of these other ones.
You're right. I mean, your returns, I think, have to have some level of risk adjustment in them when you consider, yeah, you can point to a number of altcoins and say they've vastly outperformed Bitcoin. I hold plenty of altcoins myself. I'm,
Right.
I'm by no means anywhere near a Bitcoin maxi, probably closer to the opposite of it. I
Right.
mean, there's certainly a lot of opportunity in the altcoin space, but to discount the risk adjusted returns of Bitcoin, there's plenty of altcoins that have done nothing or have gone to zero since their last peak.
Right.
And you have to consider that risk management in what you're investing in.
Yeah, I mean, I think that's a great point. What other, do you have any other charts that you'd like to, any other points you'd like to discuss?
That's I mean that those are really the main. I guess I could move over to this last one here because I alluded to this this top gauge that I'm keeping an eye at that uses this 2 week RSI channel, but then also looks at a couple of other priced or momentum based indicators that I've tried to combine into a single number to give us an idea of how close we might be to a market cycle peak. And it's basically just a pretty simple weighted average of these three that compare their current readings to what I think their critical levels are going to be wherever the peak comes in. It's interesting, especially with this RVI indicator. This is relative volatility index, similar to RSI, but it looks at standard deviations of price movement instead of absolute values of price movement. There's always been, at least in cycles that have had a halving, I know always is a loose term because there's only 2 data points, but the past two, there's been two peaks against this critical level here. So I am expecting another one to come in at some point for this indicator. So if you do this combination of what I've come up with, this top gauge, as I call it, has read very close to 100 in the 2 week candles that have marked the top, the last three tops. And interestingly, it's also been pretty close to 100 in the three mid-cycle peaks that we've seen. A little bit under. We didn't have as volatile of a run up, but it was right at 100. I sure wish I had this then, or was listening to you telling us that the cycle was overheated and get gotten out a little bit, scaled out before this. But yeah, so you know, we've seen that this gauge has hit about 100 twice in every past full cycle, and we've only hit it once so far. So I am looking for us to get up near these levels once again. Right now, I think we're at about 66. So room to run, in my opinion. But this is what I'm putting most of my attention into right now, rather than specific top targets or timeline predictions. Is, you know, just getting out as close to the top as we can.
Yeah, I mean, I think it's crypto is a bunch of if-then statements, right? If it happens, then react to it. If it doesn't happen, then there's nothing to react to, you know?
Absolutely.
So I think I think that's the right mindset. I mean, it's been great having you on. I think these, you know, these indicators are certainly useful for everyone to follow. And as a reminder, if you don't follow TechDev, head on over to Twitter. He does not have a YouTube channel. I have told him he should make one. But he does have a Twitter, and I would recommend you go follow him. I will link him in the pinned comment and the description below, so you can go follow him. And he puts out this stuff on a daily basis, so you can follow along. He also talks about some other coins as well, which I think is great too. But anyways, it was a pleasure having you here. I'm sure everyone's going to love all the analysis that you brought, and I'm sure we'll have you on in the future, especially if we start getting up to those higher levels. You'll have to come back on here and show us what's going on.
Absolutely. Yeah, would be honored anytime. I also mentioned real quick that I do also offer a newsletter that I put out a couple of times a week that you can subscribe to right through my Twitter handle at the top. And it dives into, I update regularly on this top gauge reading through that newsletter. And I also dive in more in depth into what I'm seeing as far as a Bitcoin market structure. We talk about some altcoin targets, and other charts getting into the overall health of the altcoin space. I talk about some strategies for scaling out of the altcoin market. So for folks that want a little bit more than the content that I post through Twitter, there's also that newsletter service. But I will consider the YouTube channel as well, because it's like you said, it's an interesting medium, and you've certainly killed it. So yeah, really appreciate you having me on, Ben, and it's been a real pleasure talking to you.
Yeah, great to have you on. All right, everyone, go follow TechDev. We'll put all the links down below. Make sure you subscribe here if you're not subscribed, and we will see you guys next time. Bye.